Greetings, members one and all of the Salivation Nation, with a misleading headline. It should read, Gold Futures top $1,800 an ounce to score the highest finish since 2011. The actual spot price is lower, considerably lower. In fact, we take a look here, it's about $20 lower. There has been a widening gap between gold prices and futures prices, probably the same for silver as well. And this is something where some local coin shops are actually basing their prices from the futures prices rather than the spot prices. But nonetheless, this comes to us from Market Watch. Let's explore! All right, so yes, gold futures topped $1,800 an ounce on Tuesday to tally their highest finish since 2011, as uncertainty created by the coronavirus pandemic fed the metal's appeal as a haven investment. Of course, those two words really are kind of diametrically opposed. It should be a haven asset, a haven insurance policy. Gold is one of the only major asset classes to have a positive year-to-date return. Now, the look at the S&P 500 is up as well, too, said Jeff Clearman, portfolio manager at Granite Shares, which offers the Granite Shares Gold Trust Bar, which is up 0.56%. The demand destruction wreaked upon the U.S. and global economies, and then the resulting unprecedented monetary and fiscal stimulus response here and abroad is a primary driving force behind gold performances this year. Rising numbers of new COVID-19 cases in Florida, Texas, California, and Arizona have raised concerns about the potential shape of the economic recovery from recession in the U.S. and the rest of the world. Ongoing uncertainty on the effects of the coronavirus on U.S. and global economic recovery, increased stock market volatility, in the upcoming U.S. presidential election, civil unrest and the U.S. global trade friction, along with the continuation of massive monetary and perhaps fiscal stimulus, all provide strong support for gold prices. Clearman told Market Watch, "There's very little reason to see gold prices move lower in the near future." I tend to agree with that. August gold rode $19.30, or 1.1%, to settle at $1,800.50 an ounce. That's the gold futures. That was the highest finish for the most active contracts in September 2011, according to Dow Jones market data. In August 2011, gold futures settled at a record $1,891.90. In the first half of this year, gold futures based on the most active contract rose just over 18%. For the quarter, the commodity gained nearly 13% and it climbed almost 3% for the month of June. Meanwhile, September silver, which is the most active contract, rose 57 cents, or 0.6% to $18.63 an ounce for the futures market, that is. For the first 6 months of the year, the white metal climbed 4%, but has surged nearly 32% over the first quarter. Of course, we talked about that in a previous video, how, quote, impressive that was. Not really, when you take into account that it's not really back to where it was. Prices for the precious metals notched fresh intraday highs after New York Fed President John Williams Tuesday said that the economy seems to be on the mend, but remains damaged. The economy is still far from healthy, and a full recovery will likely take years to achieve. The market also listened to testimony from Federal Reserve Chairman Jerome Powell and Treasury Secretary Steven Mnuchin. Powell and Mnuchin were offering a House Financial Services Committee guidance on the risk to lifting restrictions on commercial activity against keeping the pandemic in check. In Tuesday's dealings, the U.S. dollar was down 0.2% as gauged by the ICE U.S. dollar index, down negative 0.13%, a measure of the buck against a half dozen other currencies. The index traded up by around 1% so far this year. A stronger dollar can weigh on precious metals price in the currency, deflating the appeal of dollar-pegged commodities. Rounding out the action on COMEX in the day. Platinum was up too, 2.8% to $851.20, ending down around 13% year to date. While September, palladium added 1.8% to 1966.90 an ounce, up around 3% this year. So even though platinum rose a bit, it is down 13%, which I think leaves it as an opportunity, an investing kind of an opportunity in the metal. And it is more affordable than gold right now. And I'm kind of moving back towards maybe getting some more platinum because gold is just almost out of reach in the 1 ounce size. The most active September copper contract added 1.3%. And talks about copper, but we'll kind of go past that here. With easing coronavirus restrictions throughout the world, both copper demand and supply could increase, and that could apply to silver as well for that aspect of what silver is. Make no mistake, I think it was misunderstood in my last video. I still see silver as money, and as a hedge, it's just in a new territory now with the gold to silver ratio. So it's been pegged down in terms of its performance compared to gold. And that is really all I was saying in that video. Here's another point of view from Kitco. Gold prices advance as U.S. consumer confidence beats expectations in June. Gold prices climbed after digesting the news that the U.S. Consumer Confidence Index beat expectations in June. American Consumer Confidence Index rose 98.1 in June from May's downwardly revised reading of 85.9. The U.S. Conference Board reported Tuesday economists were expecting to see the index at a reading of 91.8. Gold prices first ignored the data, then began rising as bullish traders stepped in to buy the dip. The August COMEX gold futures last at $1,788.30 an ounce, up 0.4 on the day. It did get $1,800 before. The Present Situation Index, which describes consumers' views on current business and labor market conditions, increased from 86.2 from 68.4. On top of that, the Expectations Index, which represents consumer short-term outlook on income, business, and labor market, rose to 106.0 from 97.6. Even though consumers are hopeful about a short-term outlook, the overall path to an economic recovery remains uncertain, says Lynn Franco, Senior Director of Economic Indicators at the Conference Board. Consumer confidence partially rebounded in June, but remains well below the pre-pandemic levels. The Present Situation Index suggests that economic conditions remain weak. Looking ahead, consumers are less pessimistic about the short-term outlook, but do not foresee a significant pickup in economic activity. Faced with an uncertain and uneven path to recovery and potential COVID-19 resurgence, it's too soon to say that consumers have turned the corner and are ready to begin spending at pre-pandemic levels. And yeah, I know I'm part of that, for sure. Looking at the labor market, the report noted that the outlook on jobs was mixed. The proportion expecting more jobs in the months ahead fell from 39.5 to 38.4%, while those anticipating fewer jobs in the months ahead also declined from 19.9% to 14.2%. Traders closely watch the Consumer Optimism Survey as it is a potential leading indicator for economic growth. The more optimistic consumers feel, the more likely they are going to spend money and vice versa. The June Consumer Confidence Survey likely missed the increasing coronavirus cases count at the end of the month, said CIBC Capital Markets senior economist Andrew Grantham. In a sign, the survey may not have picked up much of the impact from the recent spike in case counts. Consumer confidence was up in Florida and Texas, and the former actually posting a much bigger increase than the national average. That puts a big question mark over what today's consumer confidence figure means for future spending growth, Grantham wrote in a note to clients. Oh yeah, so there you go. Very interesting. Let's take a look at where the markets are right now for the actual spot price. They're all up. Gold is up almost a half a point, but look at that, $1,782. It's getting closer to $1,800. In fact, if the futures are hold true, well, we'll get there sooner rather than later. Silver is now comfortably above the $18 range. it is the best performer of all the metals today, $18.31. And the platinum is up $12 here. We can see almost a 1.5% increase. Palladium is up 1.69 to $1,994. There they are. There's where the markets are. And I believe overall, I'm bullish on where the markets are going for the reasons stated in that article, but also just the uncertainty out there. I mean, this recent surge, and with what the Fed has been doing and the prospects of another stimulus package coming out, my confidence in the dollar is, in the long term, is really under pressure. Yes, the dollar, it is a currency to be reckoned with because it is traded around the world and is respected around the world. And I know other nations are also doing their fair share of central bank stimulus and liquidity by injecting cash into their markets. But nonetheless, at the rate we're doing it and what's going on in the world today, it could be a house of cards that could collapse or it could keep going. How long can it go on? We don't know. My guess is they are planning something in Jackson Hole or elsewhere to try to either re-engage or assure folks of the stability of the dollar somehow, some way, or they'll reset it. And what will they do? I don't know. Regardless, we hold gold and silver as ways to protect ourselves against this economic instability, financial instability, and also dollar currency instability. And we could have a crisis on our hands in terms of the dollar if we don't play our cards right, because we can only go on for so long with the way we are, considering the world reserve currencies that are out there and what other nations are doing. The more nations that hold gold in their central banks, like China, Russia, Turkey, other nations around the world, well, that means they're much more competitive than they were 10 years ago. Much more competitive than they were 10 years ago. And that's even considering how much gold we have in our coffers compared to them. So interesting indeed. Post your thoughts below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.